Hello, my name is Paul McMillan II, and welcome to another backtesting session. It is April 21st, 2022. And yes, it's been a while since I've done backtesting sessions and I've actually traded. I've been busy getting involved into the crypto world, and it's been phenomenal. But now it's time to get back to the Forex world as well. So the very first thing we're going to do is we're going to mark up market structure from the 15-minute to the 4-hour time frame. So we're going to go all the way to the beginning. So let me put it on full screen here and let me pause this recording until I get to the beginning. Be right back. So as you can see, we're all the way to the beginning to where price actually stops showing itself. So we're going to put a vertical line here. So this is all the way as back as price can go at this point. So then what I'm going to do is actually save. And then what we're going to do is we're going to actually mark up market structure based off of institutional imbalances. And I'm going to explain what imbalances are as time goes on. So we could see some institutional imbalance here that made price spike up here. So this is a good support that we could put here, a horizontal line rather, put one here. Because when price hit support here, it made price go all the way up to the next point here, which you can actually see it, I would say, right around here. And then when we go up, you can see that price respected this area here. All right. You can kind of see how price really respected it here. And then you'll see how price kind of respected up here as well. And let me go ahead and save my progress. And so now we're going to kind of look and see, and then we can actually see that price actually respected this area as well. Up to here, and then up to here. Now what we're going to do is we're going to go ahead, because we marked up the 15-minute. And so then what we're going to do is we're going to actually draw, our zones, okay? And this zone, let's see, this is going to be based on the 4-hour, the 15-minute actually. So yeah, I like to make the 15-minute yellow. So we're going to draw zones based off of these institutional imbalances and off of these horizontal lines. Right. Then one here, one up here, and a good one up here, right? So now that we draw our zones, we're going to move on to the 30-minute. So let's switch over to the 30-minute. So now we're going to draw our zones for the 30 minutes. So we're going to go all the way back. So we marked up everything on the 30-minute. So as you can see, we marked up everything on the 30-minute from this vertical line. So now what we're going to do is we're going to mark up. I'm going to mark up here. And so we can see that price actually respected this area. There was a lot of wick areas, so they sort of respected this area here. A lot of institutional imbalance went up to here, as well as right here as well. So then what we're going to do is we're going to actually change these horizontal lines to the 30-minute, which is going to be green. All right. And then we're going to draw zones off of these as well. We're going to change this to green as well. All right. Let me go ahead and save my progress here. And so then when we're trading, you see that's the 30 minutes. So now we're going to kind of mark up this as well. And this is all the 30-minute here. So let me grab my horizontal lines. See our price respected this area really well. See that price came back up and mitigated at least half of this imbalance that this bearish trend created. It went down even further. So this is a good resistance here. Got a good resistance line here. Right there. And right there. And then we're going to draw our zones off of these lines here. Right. So now we draw the lines. Now we've drawn our horizontal. Now that we have drawn our zones on the 30-minute, now we're going to switch to the 1 hour. So we're going to go to the 1 hour here. As we can see the 1 hour right here. So then, see how price respected this area, broke through, bounced, and then mitigated all this imbalance here, mitigated that area, then came back and mitigated this area, and then came back and mitigated all this area and just dropped further. So we're going to do the same thing here. This is actually the 1 hour time frame. So actually, let me do this. So I'm going to change this to, let's see, the 1 hour, the red line. Right. And then we're going to draw our zones here. Make it red here. There we go. And so now, as we can see, price is starting to go bullish again. And this is current price. So now what we're going to do is we're going to go to the 4 hour, see if there's anything else we need to mark up. And as we can see, we don't. So then now at this point, what we're going to do is we're going to go all the way back to the 15-minute. And now we're going to figure out exactly what price is doing next and see if our analysis is correct based on what the replay, the back testing tells us. So we're going to go all the way back to the 15-minute. And so now what we can see here is, let me do, so what I need to actually do is, put this up here. It's more active. So then sometimes I kind of tighten this up here. Now I might actually leave this zone here, but I probably might not need it necessarily. But I probably might erase this because I don't really need this zone. So now what we have done is we have done step one. We have marked market structure for the 15-minute to the 4 hour time frame. Now what we're going to do is identify the trend. So as we can see here, you can see that price actually went into a downtrend at this point, and it created a lot of imbalance in the market as well. There was an imbalance here. It came back and mitigated this area off of resistance, and it made price drop even further down to this support. And then they bought price all the way up to mitigate all of this imbalance that this created, and then came back to support and hit it a couple of times. So you can see that this is actually a liquidity point. So then what I'm going to do is, let me do this. I thought I actually have it here, but I don't. So let me go to here. I think this is what I wanted. So this is a liquidity point right here. So I'm going to put a $sign here. Now, to explain what imbalances are in the market. So when the banks are trading our money in the market, they have so much money in the market that they actually make price either drop really, really fast into a bearish trend, or they make price shoot up extremely fast in a bullish trend because they have so much money in the market. But say, for example, in this situation here, when they send price down, this caused a lot of imbalance in the market. And it also left a lot of buy orders open as well. So even though they were billions and trillions of dollars in profit on this sell that they took, they were also billions and trillions of dollars in negative because of this buy that price that price did up to this point. So they have to come back and mitigate this area in order to buy off whatever buy orders that they left open in order to be back into the positive. So this is a great way to get consistent trades based off of imbalances in the market, because now you're consistently trading with the banks instead of against the banks, if that makes sense. So the very next thing I want to do is locate the order blocks. So what I do is I like to turn on my order flow tracker indicator, and it lets me know order blocks that are actually activated. And as you can see, there was a lot of order blocks activated here, and that's what caused price to actually go into a bearish trend, because the banks made price sell all the way down to this point. Okay, so they're eventually going to have to come back and fill all these orders because there's a lot of imbalance in the market. So then the next thing I love to do is I love to locate the Harami candles. And when I look at the Harami candles are basically candles to where there's a doji and then a very strong master or Harami candle that basically when price reverses and goes up, basically. And I can see that there. So when I locate that, then I can see that price went up into an imbalance here. So they're going to have to medicate some of this imbalance, at least half of it, before they decide to go up. Or they might medicate all of this area and push price down to this support and then decide to create an all-time high and to go up. All right. So then once I locate that, so then I go ahead and actually mark the areas where the imbalances are, because these are the areas where I actually use for my take profit. And so mark these and make these blue. So let's see. So once I figure this out, what I like to do is, matter of fact, I like to, take the horizontal ray, mark up all the imbalances so that way I can see it, because these are going to be my take profit points. So this will probably be my take profit 1 and 2. If price decides to go up and mitigate this area, then drop. If they decide to drop it down to here, then these are going to be my take profits down to here. So I'm going to mark this here. But then the very next thing I'm going to do as well is I'm going to turn on a higher high and lower low strategy indicator. So what I'm looking for is I'm looking for price to either break this most recent high, and if it does, and the next candle closes above and goes up, then I'm looking for price to buy all the way up into this resistance. If it breaks down here, it breaks this line here, then I'm looking for the next candle to close below and to drop all the way down to this next zone. And that helps me to determine which way, whether I'm going to buy or sell according to what imbalance that the banks are going to decide to fill first, if that makes sense. So what I'm going to do is I want to actually erase this first, actually. Let me just go ahead and erase these. Then I'll just do that. Whoops, let me go back. Turn the order flow tracker off. All right. So then the very next thing that I'm waiting to do, and like I said, is I'm waiting to see which way price breaks. If it's is it going to break and close above this zone here and go up to this next zone, or is it going to close below this breaking point and go all the way down to here? So what I'm going to do is I'm going to take my risk to reward tools, and if price breaks I'm going to put my stop loss here, and I'm looking for price to break through here. And then I'm looking for this to be a first take profit. So I want to actually set my horizontal line here, the TP1, because I want to get at least 10 pips worth of the NAS100 in order to score. And this is way more than 10 pips, so this is good. So then this is going to be TP1, and this is going to be 959 plus pips. All right, and this is going to be take profit 2, which that is going to be, let's say, over 2200 plus pips. I'm going to do TP2. 2257 plus pips. Okay. And then my stop loss is going to be up there. Now, a couple things too is I'm going to also actually my stop loss will be right here. Then this is going to be labeled. I'm going to actually label this as my stop loss. It's going to be white. And then I'm going to set, thin this out. And then I'm going to set another risk to reward tool for the buy, just in case the price breaks above and go up to here. So I'm going to place that here. So then I'm looking for price to break past this line. Stop loss is going to be here. And then first take profit probably going to be up from here. So yeah, that's decent for take profit 1. I'll probably make take profit 1 right here. And so then put a horizontal line here. That's going to be TP1. Whoops. This is going to be TP1. That's going to be 570 plus pips. All right. And then TP2 is going to be all the way up until this point here. And then how many pips is that? That's going to be over 1,300 pips. TP2, 1,300 pips. All right. So that way, when I put these in, either way, when I click on these, it's going to give me the stop loss here and the take profit here that I can put in my MetaTrader 4. And so then basically what I do is I wait until the 9:30 bell in the New York session, and I wait to see which way price is going to break. Then what I do is I turn this off, and then I turn on the Delorean EMA indicator, because I use this indicator as an extra confirmation on top of my analysis based off the imbalance in the market. So whenever the yellow EMA crosses the red EMA and the blue line, then usually that's basically a sniper entry for a buy or a sell. In this case, you can see when the yellow crossed over the red and red and blue, it instantly bought up all the way up until this point. Now, me personally, let me check something here. Let me turn on some of the order blocks here to show order block finder. There was an order block here for a buy, for a sell. That's why price went all the way down to here. Now, price is probably going to actually, it's already kind of mitigated this area here, but eventually they're probably going to bring price to go all the way up to create an all-time high. But something tells me that they're probably going to fill all this imbalance first, and come down to here, and then they have made all their money back and then decide to buy price all the way up to here. That's what I'm thinking they're going to do. So now what we're going to do is we'll go back to the order block finder, turn this off, and then we're going to let the replay play. I mean, we're going to let the backtesting replay play and see where price actually went. Let me pause this recording real quick. Be right back. All right, so I'm back. So let me do a couple things here. I got to there we go. So we have to kind of move things a little bit closer. There we go. So, matter of fact, let me fit it to screen again. There we go. So we can kind of see the whole screen here and what price is going to do. So we see our take profits here. So now I'm going to see if I can actually kind of zoom in on the screen. Yeah, this is good right here, because we can kind of see what price is going to do at this point. So then what we're going to do is we're going to play the replay and see exactly what price ends up going. Question is price going to actually break above here, close above, and go up to the next resistance here, or maybe even this and fill this imbalance and go up to here? Or is it going to actually decide to come down and mitigate all this imbalance here before they decide to bring it back up again? And one thing we want to keep in mind as well is you'll notice here too that at this point here, price is considered over bought at this point as well. So that's a huge factor to kind of keep in mind, that price probably might actually start to go bearish. So I'm probably about 95% sure that price is probably going to go bearish, because there's a lot of imbalance here that they're going to have to mitigate and take care of before they decide to buy it up further. So let's see what they decide to do. So we're going to play forward. So as we can see, this is forming what looks like it might be forming a banker's candle, possibly. So so let's move forward. Yeah, and see, you can see that the yellow EMA looks like it's about to cross the red EMA. So that might be an indication, and you can kind of see that on the RSI. So let's see where it goes. Now, at this point, I'm still waiting for price to cross this line here before I decide to actually go into a sell position and wait for it to go down. So I'm just sitting on my hands and waiting at this point. Now, this is a strong indication that price is going to probably start going bearish, but I'm waiting for that candle to close below here. So I'll probably wait. So I probably will wait for the next couple of candles to close below to confirm that it's bearish. So let's see. See that? So it's kind of going back and forth. And, you know, it's kind of, you know, just ranging back and forth, consolidating. So I will wait. Now, this is letting me know that it's about to sell. And then it looks like that it's coming back to kind of mitigate this small imbalance, and they might go ahead and drop it. You see, it's ranging a lot, so I wouldn't have gotten into a trade yet. Not yet. Now, this might be an indication. Now, if the next candle closes below that, or the next two, then I'm definitely jumping in on the sell. So let's see. Not yet. Nope, not yet. Now, that might be my indication to jump in because it closed below that, but I probably would have been waiting for the next candle. Yeah, so not yet. It's coming back. Now, that probably would have been my cue to jump in. But let's see. Yep, drop. See that? It's coming back up. Now, I would have definitely dropped came in, it can drop down like that. So at this point, if I saw that price was pushing past this point, especially with a very strong master candle like this, well, this is a banker's candle. So once I see that price is really dropping down strong here and pushing down, I would have already had my take profit and stop loss pasted in my MetaTrader 4 for the sell. I would have just hit the sell button and probably would have got my 10 points at this point, because here, you'll see here, I'll just take another one here. Even from this point, if I had jumped in and went all the way down to here, this would have been way beyond 10 pips worth of NAS. I would have made my money for the day. So this would have been a good time to jump in. But let's see what else price does. Yep. They definitely had to mitigate all of this area here. They might mitigate down to this point halfway and then maybe shoot it back up, or they might get all of this and then go down, but we'll see. So let's see what price does. Yeah. Now at this point with this is an indication that it's just a doji, but then price will probably drop more. And so I probably would have made my exit here, because really reality, if I had got in even at this point here and came out of here, I would have got a bag with this over 1,200 pips of NAS. That would have been a huge bag. But let's see what else price decides to do. Yep, and then dropped a little bit more, dropped way more. So we definitely would have won this trade. So now what I'm going to do is I'm going to go all the way back to here, and then we're just going to play the full replay, and then we'll wrap it up. Yep, there you go. That would have been our winning trade there. So it would have been a solid sell on NAS. And then at this point, if you look at the RSI, price is over sold. So now price is ready to start going back up again. And it will probably come up and mitigate this area, pull back, and then it will start pushing up. Matter of fact, yeah, so they dropped it a little bit more here. And look at that, it actually hit the support. And then it actually dropped even more. And so now that it broken this low, then at this point, it's going to be ready to start going up, because now you have a lot more imbalance that you have to fill now. So I was right that they had to fill all this imbalance, and that's what they did and create. And now they're going to create an all-time high and possibly even push price even further down. And then eventually they're going to buy all this and buy up, because look at all this imbalance that sell created just by filling this. So you want to always trade imbalances, because that's more consistent, because you're actually trading exactly when the banks do. But you wouldn't want that trade. So that's typically how I actually trade in the market. So yeah, I mean, that's pretty much it there. So yeah, that's it for this session here. So yeah, guys, it's been a while since I've been doing back testing sessions because I've been busy in the crypto world, but I'm going to start getting back into it. So yeah, let's go ahead and get started. So I'll see you guys in the next testing session, back testing session. Thanks for watching. See you guys later. See you guys in the next training session.